Hi guys, welcome to my channel KP Financial and Strategy Review. Myself Praveen Kumar. I'm a qualified chartered and management accountant. Before proceeding into today's topic, I request each and everyone to subscribe, like and share this channel so that it can reach to many relevant people. And this is a part 2 of previous session. In a previous session part 1, we have discussed what is the meaning of financial accounting, what is the basics. We have discussed in part 1, and this is a part 2 of a previous session, and here we'll be discussing the main components of financial accounting. And what are those components of financial accounting? Here if you see, we have discussed these three in the previously. We'll be discussing about income. What do you mean by income? What do you mean by expenses? What do you mean by profit? What do you mean by loss? All these are P&L form of P&L statement. And next we will be discussing about assets, liabilities and equity. This will be forming a part of a balance sheet. This 4, 5, 6, 7 will be forming a part of a P&L. 8, 9, 10 will be forming a part of balance sheet. Now, first we'll discuss about income. Income is nothing but, in a simple layman's language, by selling this particular material, or by selling this particular good, or by providing these particular services, whatever the amount you have earned, that is called as income in a simple layman language. That is nothing but, in financial terms, it will be, the terminology will be revenue or sales. So by selling this particular good, or by selling this particular material, or by providing this particular services, whatever the amount you have earned in the ordinary course of business, generally that is called as a income or sales. And this income and sales will be further bifurcated for the purpose of analysis into segmental wise, divisional unit wise and geographical wise. For example, if you have a different line of business or different divisions, then we'll segregate the revenue or sales division wise, unit wise, segment wise. And in addition to that, if you have a business in more than one city or more than one locality or more than one country or one particular state, then we'll go location wise. That is called as a geographical segment. Next, expenses. In layman's language, in order to generate this particular income, in order to generate this particular revenue or sales, what are the expenses you are incurred directly or indirectly? That is called as an expense. So for this purpose, expenses are bifurcated into direct and indirect. Cost of these, those are COGS, called as cost of goods sold, and these expenses are directly incurred in order to directly related to this particular sale of product. And next is operating expenses. These are the expenses incurred in a normal operating nature of a business. Next is non-cash expenses like depreciation or anything, etc. Like any other expenses non-operating, like selling and distribution, and some other expenses, etc. Like non-operating expenses like finance cost, sometimes not related to a business, or any other extraordinary items, etc. These are called as other expenses like above. So we will also segregate this cost of goods sold, operating expenses, non-cash items, other expenses, same geographical wise, unit wise, segmental wise, in order to match with the respective sale, so that we will get what will be the profitability of each particular segment or each particular unit or geographical wise as a whole. So we are matching, it is called as a matching concept. Whatever the expenses incurred in order to generate this income, those are called as a cost. So if you remove income minus expenses, we'll get a profitability. This is nothing but, what in layman's language, whatever the money you left over after deducting or subtracting your expenses from your income, that is called as your profit. And in financial terms, those profit will be four categories: GP called as gross profit, OP called as operating profit, NP called as a net profit, and OCI is called as a other comprehensive income. We'll discuss in detail in a coming series. So in short, this is the revenue, this is the money you earn through revenue, and these are the expenses you incurred in order to earn or generate this revenue. So what is left over is called as a profit. If expenses are lower than income, that will lead to profit, otherwise it leads to loss. Simple layman common sense language. There is no any specific skills are required in order to understand this. There is a very basic common sense language. And the next is, these are called as a P&L language, P&L account statements, P&L account components. Next is 8, 9, 10. These are nothing but balance sheet components. These are called as assets, liabilities, and equity. These are also called as statement of financial position. As on this particular date, as on this particular measurement date, either balance sheet date or whatever may be, as in this particular date, how many assets we are holding, how many liabilities we are owing, what is the amount of final equity lying to the shareholders. This is what the balance sheet shows. Here assets means things whatever you own that has a value, means as on that particular balance sheet date or measurement date, whatever called as, on this particular date, how many whatever the assets which has a value you are holding, and you are owner of that, or you are having at least control of those assets, is called as an assets. Example, PPND, like property, plant and equipment, and further bifurcated into assets into non-current assets and current assets. Non-current assets means which we are holding these assets for more than 12 months and whose economic benefits are spread over for more than one accounting period, more than 12 months. It is called as a non-current assets. If the assets are holding for up to up to period of 12 months, or whose economic benefits are going to be wiped out within the next period of 12 months from the balance sheet date, then those are called as a current assets. So these are nothing but the whatever the assets which are owning by us or controlling by us. Next is nothing but liabilities. This is nothing but whatever the money you owe to others, like bankers or creditors who have supplied you material or given you services, whether capex or non-capex, etc. So whatever the money you owe to them, that's called as liabilities. In addition to that, sometimes you might be receiving advances from the customers or something, someone, etc. Those advances which are received, which have to be used in the future, which has to be repaid in the future, like deposits, etc. Deposits refundable or deposits payable back. These are nothing but liabilities. So here also liabilities are segregated into both current and non-current. Non-current are nothing but those which are going to be payable within a period of more than 12 months. That is called as non-current. Or those which are going to be repaid within a period of 12 months. These are called as a current. So if you see logic, if you remove from your income, if you remove your expenses, you will get a profit or loss. In a similar way, from your total assets, if you remove your liabilities, you will get as an equity. What do you mean by equity? Equity is nothing but the difference between assets and liabilities. Is also called as the final residual interest left over to the shareholders. In a simple language, you purchase a building for 1 crore, example, and in order to purchase that building for 1 crore, you have taken a loan from bank 70 lakhs. So what is left over for you tomorrow if you sell this building for 1 crore, and after this 1 crore, out of this 1 crore, you need to pay back to your bank 70 lakhs, whatever is lying as on that date. So what is left over in your pocket? That is called as an equity. There is nothing but difference between assets and liability. There is an equity function also for this. Assets is equal to liability plus equity. This is the common basic equation in accounting. Hope you have understood the P&L account items in short, and as well as balance sheet items in short. Please keep watching. I will be posting a series of videos very shortly, and going forward, this is only a nutshell in a short. Going forward, I will be taking up I will be going in depth, so that we will be discussing about in-depth crux of US GAAP and in-depth crux of IFRS standards, international accounting principles. We'll be discussing in detail with the real life case studies. Hope you enjoyed this video. Thank you. Keep watching. Thank you very much.